Hello, everyone. Welcome as we dive into today's topic on the best practices for e-commerce tracking and expenses. I'm ready to help you tackle that. So let's get started. My name is Jacob Curtis. I'm a CPA, a certified Profit First professional, and a business coach. I started Curtis Accounting Solutions to remove the stress of doing the bookkeeping, payroll, and taxes and provide practical business advice that helps e-commerce stores piece together financial freedom. I'd love to hear your thoughts and questions on today's episode. So please leave a comment below. And remember to like, share, subscribe, follow all those good things. Expense tracking is crucial because it allows you to control costs and ultimately increase profitability. If you don't know where your money is going, it's hard to plan for future growth or even cover your tax obligations. Imagine running a business where every dollar is accounted for. That's the power of an efficient expense tracking system. First, let's talk about organizing your expenses. You want to start by separating your business and personal finances. This is key to maintaining clear records for the business and for you personally. Next, you want to categorize those expenses. For example, break them down into categories like inventory, shipping, marketing, software. Tools like QuickBooks or Xero or others make this much, much easier because they provide a default list for you. So let's say you spend $500 on marketing this month. With the right software, you'll be able to see that as a distinct category, giving you a clear picture of your spending habits. Now, as a certified Profit First professional, I always recommend implementing Profit First, the Profit First system in your business. This system helps you allocate a percentage of your income to specific categories, namely profit, owner's pay, taxes, and operating expenses. I also would advocate for adding in there an inventory account if you are an inventory-based business. This method prevents you from overspending and ensures that you're paying yourself. For example, let's assume that you made $10,000 in sales after inventory, after you've bought and sold that inventory. Under the Profit First method, you might allocate 30% of that to owner's pay, 10% to taxes, 50% to inventory, and then 10% for profit. This keeps you disciplined for your spending and making sure you don't overspend in some areas. Next is automation. Automation is your best friend when it comes to expense tracking. So you want to sync your bank accounts with your accounting software and use apps like Expensify or HubDoc to automatically capture receipts. Now, this not only saves time, but also reduces the risk of errors when you're categorizing those expenses. So imagine the time you'd save by automatically tracking $3,000 in monthly shipping expenses with no manual input. If that was just an automatic thing that you can set up with your accounting software. Once your expenses are tracked and categorized, don't forget to review them regularly. Like there's no point in actually categorizing them if you don't review them. By doing so, you're going to catch unnecessary costs like that monthly $200 subscription that you forgot to cancel. You can also negotiate better rates with suppliers and say, look, I've spent XYZ with you and this is my sales and this is what I'd like to do. So let's say that you notice a trend in your shipping costs and they spike during the holiday season. Preparing for that early can help you avoid that big hit to your cash flow in that busy season. Planning ahead for expenses like marketing expenses and marketing campaigns, taxes, business growth is all crucial for staying profitable. For instance, if you're launching a $2,000 Facebook campaign ad next quarter, you'll want to make sure you have that budget ahead of time. And don't forget about taxes. Setting aside 10 to 15% of your revenue ensures that you won't be caught off guard when tax time comes. Let's go over some common e-commerce expenses and how to actually track them. First, inventory. If you purchase $5,000 worth of inventory a month, track it under cost of goods sold for the cash method basis of accounting or under inventory for accrual-based accounting. Shipping and fulfillment fees, these should all be tracked separately from inventory, even though they could be considered part of inventory. You want to track those fees separately so you can analyze them in future time and hopefully renegotiate or find a better vendor or something like that. Another one is to look at is processing fees. If you pay 3% in processing fees on $10,000, that's $300 that you need to record as an expense. Those are all good things that we would want to record and have as part of your accounting to make it so you have a full picture. Inventory is often the largest expense for e-commerce businesses because you're an e-commerce business, you sell products. By using a dedicated inventory account, you can match that cost of inventory to the revenue generated by selling those products. That's the accrual method. For example, if you spend $6,000 on inventory this month, but only sell $3,000 worth, track the unsold inventory as an asset. And then again, remember to review your open to buy budget regularly to prevent overbuying and tie your spending to actual sales. Now, sales tax is another expense that you want to track carefully. You want to set aside a portion of every dollar that comes in to cover sales tax. Ideally, you're going to use some kind of tax automation software like TaxJar or Avalara to really ensure that you're collecting the proper amount of sales taxes on each transaction. If you collect $800 in sales this month, make sure you've accounted for and paid on time that sales tax to avoid penalties. Unexpected expenses also happen to every single business, whether it's equipment breaking down or an emergency purchase. Keep an emergency fund, cover these expenses. In Profit First, that could be what the profit account is used for, but usually that is used for those unexpected things. For example, if you typically spend $10,000 a month, aim to have at least five, ideally closer to like 15, 20, or 30,000 set aside for emergencies so that you can have that available if something were to happen, because it's not if, it's usually when. So track your cash flow weekly so you can adjust your budget as you go throughout the year. And finally, consistent and accurate expense tracking is key to growing your business. The tools and strategies we've discussed today will help you simplify that process. Remember to review your expenses regularly. This is key. You have to review your expenses regularly and adjust your budget when necessary to stay profitable. If you have any questions, comments, anything, and need assistance with managing your company's finances, don't hesitate to reach out to me. I'm here to help you piece together that financial freedom. Schedule a call with me to get started by scanning the QR code on the screen or going to jacobcurtiscpa.com/5-strategies-calendar to get started, or just click the pinned comment below. And remember to follow me, Jacob Curtis CPA and Curtis Accounting Solutions on Facebook, Instagram, Pinterest, and YouTube. Thanks for watching, and we'll talk to you later.